Welcome to Quick Course Digest. Today, we're diving into personal finance, and we're going to treat it like a roadmap for your entire financial life. From that very first credit score all the way to the legacy you'll one day leave behind. We're going to break down all the key milestones that really shape your future. Ready? Let's jump right in.
Our journey today has 5 main stops. We're going to kick things off by building your financial identity. Then, we'll navigate the exciting and sometimes tricky world of major purchases. After that, we'll tackle how to conquer debt, start planning for a really comfortable retirement, and finally, we'll think about the kind of legacy you want to leave behind.
All right, first up, building your financial identity. And the real cornerstone of that whole identity, it boils down to one single number that can pretty much open or close a lot of doors for you. That's your credit score.
So, let me ask you a question. What's your financial report card look like? Because really, that's exactly what your FICO score is. It's like a grade that tells the entire financial world how you handle your money.
A FICO score is just a 3-digit number that ranges from 300 to 850, and it's simple. The higher the score, the better your financial grade. A good score is basically your golden ticket. It unlocks better opportunities, like getting a much lower interest rate on a car loan, which could literally save you thousands of dollars over time.
So how is this all-important number calculated? Well, take a look at this. The 2 biggest pieces of the pie, by far, are your payment history and how much you owe. Together, those 2 things make up a whopping 65% of your score. That means just paying your bills on time, every time, is the single most powerful thing you can do to improve it.
Okay, let's move on to our next section and see how this all starts to build. We're talking about navigating major life purchases. Yep, the big ones, your car and your home.
First up, the car. Should you buy it or should you lease it? Well, buying means it's yours. It's an asset you can sell later and you can drive it as much as you want. Leasing, on the other hand, is kind of like a long-term rental. You get lower monthly payments and a shiny new car every few years, but you gotta watch those mileage limits and you're not building any ownership. So it really comes down to this. Which one fits your life better right now?
And the exact same kind of trade-off applies to housing. Renting gives you incredible flexibility. You can move easily and you're not on the hook for surprise repair costs. But buying a home, well, that's a powerful way to build long-term wealth through what's called equity, and it offers a kind of stability you just can't get from a lease. So how much house can you actually afford? A fantastic rule of thumb is the 30% rule. The basic idea is to keep your total housing costs, that's your mortgage, taxes, insurance, everything, at or below 30% of your gross monthly income. Following this little rule helps make sure you don't end up house poor with plenty of money left over for saving, investing, and, actually living your life.
This brings us to a really critical part of the journey, mastering your debt. I know for a lot of people, this can feel totally overwhelming. But here's the thing. With a clear strategy, becoming debt-free is an absolutely achievable goal.
First, let's get something straight. Not all debt is bad. Good debt is actually an investment in your future. Think about a mortgage for a house that gains value, or a student loan that boosts your earning potential for life. Bad debt, on the other hand, is usually that high-interest debt you take on for things that lose value, like swiping a credit card for a new TV.
Now, when it's time to pay off that debt, there are 2 really popular strategies. You've got the snowball method, which focuses on knocking out your smallest debts first. This gives you these quick, motivating wins. Then there's the avalanche method, which targets your highest interest debts first, saving you the most money in the long run. So the question is, are you motivated by psychology or by pure math?
And this shows perfectly how that snowball method works. You list all your debts from smallest to largest. You attack that smallest one with every extra dollar you have until it's gone. Then, you take all the money you were paying on that debt and you roll it onto the next smallest one. That feeling of momentum is just incredibly powerful, and it's what keeps so many people going.
Okay, with our debt under control, we can shift our focus way down the road to planning your retirement. This whole section is about building a nest egg so that one day work becomes a choice, not a necessity.
The million-dollar question. Or for a lot of us, the multi-million-dollar question. How much money do you actually need to save up for retirement?
A really helpful guideline to get you started is the 4% rule. It basically suggests that you can safely withdraw 4% of your total retirement savings in your first year of retirement, and then adjust that amount for inflation every year after. It's a simple rule, but it's a great starting point to help you estimate just how big that nest egg needs to be.
This table really puts things into perspective, doesn't it?
If you use that 4% rule and you want $50,000 a year to live on when you retire, you need to have saved $1.25 million. Want $76,000 a year? You're looking at nearly $2 million. This just shows how absolutely critical it is to start saving as early as you can and to be consistent.
Finally, we've arrived at the last stop on our financial roadmap, securing your legacy. This is all about making sure that everything you've worked so hard for is protected and passed on exactly according to your wishes. And we do this through something called estate planning. And no, this is not just for the super wealthy. It's for anyone who wants to have a say in what happens to their stuff and who gets to make decisions for them if they're unable to.
Here are the essential documents you'll want to think about. A will directs who gets your assets. A trust can help manage them. A power of attorney appoints someone to handle your finances if you can't. And a living will outlines your medical wishes. Getting these documents in place just provides so much peace of mind for both you and your family.
So, as we wrap up our journey, the ultimate question really is this: what story will your financial legacy tell? Will it be a story of intention, of preparation, and of security? Because it's the small, consistent choices you make all along this roadmap that will ultimately write that story.